The art market right now is about $60 billion a year.
Roughly half of that goes through private sales and half of that goes through public auction.
And art, unlike real estate or even cash flow linked investments, isn't linked to any one currency. So art can be sold in London, can be sold in New York, can be sold in Hong Kong, across currency. So very interesting from a global perspective.
When you think about the art market, you don't just think about it as one broad blanket. You think of it as different collecting categories within the broader market. So you have contemporary art, post-war art, impressionist and modern art.
Art has performed quite well actually compared to the stock market in recent years.
So Citibank did the first correlation study in 2015 and concluded the correlation factor between art overall and the S&P was roughly 0.11. Now what that means practically is that if you have an asset class that is uncorrelated with the S&P, that means that when the stock market goes up or goes down, that asset class doesn't necessarily follow the same pattern. So it's a nice way to diversify a portfolio with an outperforming investment that doesn't necessarily behave the same way that the stock market would behave.
I think interest in the art market is only continuing to rise. Interest among investors who I think have identified the art market as really one of the last major markets in terms of size that has not been transformed into an investable asset class broadly. So I think there's both demand from that collector and investor base.
The key thing that's interesting right now is there are opportunities for new groups of investors and new capital to be infused into the art market that hasn't participated in this market in the past. And we believe more capital will come in and that will just expand the market.